Hello and welcome to the fire trading series. So these are a series of webinars that we are going to be doing from episode number 1 through to episode number 2. So the goal is very simple. We will be looking to achieve progress where you begin as a beginner trader. Let's say you've never traded before, you don't understand what forex trading is, you have no prior experience trading. And now you begin with episode number 1, go through to episode number 10. And once you get to that level, then you become a professional trader. You'll be able to trade independently. You'll be able to make your own analysis, make your own trading decisions, and eventually, if you commit to the journey, become a professional trading trader. So first things first, for those who are joining now, I would like to begin with a mic test. So if you can hear me clearly, kindly type hi on the live chat, and these will confirm that everything is working just fine. Awesome. Hi, Wafula. Hi, Salva. Hi, Nicholas. Hi, guys. So if you have any questions arising from the presentation, feel free to type those questions in the Q&A section or in the comment section, and I'll be responding to those questions on the go. So the very first session today is very simple. We'll be looking at introduction to forex trading with fxpressor. So let's get started with getting to know who fxpressor is and how you can participate with them. So fxpressor is a brand that is owned by EGM Securities. EGM Securities being the financial markets broker that is licensed and regulated by the Capital Markets Authority of Kenya. So EGM Securities is a global brand operating under Equity Group, that is equity with an I. So we are a big brand operating in multiple countries. We have branches in Dubai, we have the UK, and so on. So today's focus is on the fxpressor trading platform. So our main product is a trading platform. So if anyone is asking you out there, what is fxpressor, what do they do? Tell them it's a financial markets broker operating under the CMA, or the Capital Markets Authority of Kenya. And what we offer is a trading platform. So on this trading platform, you're able to access the various global financial markets. And these includes trading of currencies. You're able to speculate on the exchange rate between currencies such as the euro and the US dollar, the UK pound, the Japanese yen, the Canadian dollar, the Swiss franc, and so on. So there will be quite a large number of currency pairs available for you to speculate on. At the same time, you'll be able to trade commodities, and these varies from agricultural commodities such as cocoa and coffee. There's also mineral commodities such as gold, silver, platinum, palladium, and so on. And also we have the energy commodities such as Brent oil and the West Texas Intermediate oil, or what we call US oil. So we give you access to all these markets on one single platform. So using this trading platform, you are able to identify the markets that you're interested in, deposit money in your live trading account, and then trade those markets with the aim of making a profit for yourself. So if you have a question about trading, if you want someone else to be trading on your behalf, if you want fxpressor to be trading on your behalf, we don't do that. So that's why we are investing in this program to help you understand what the financial markets are, how you can participate. And once you get the knowledge and the skill, then you're able to trade on your own behalf without having to delegate that job to any other person. So now that that is behind us, would like to begin by introducing the fxpressor website. So the very first thing you do that once you join fxpressor is to register for an account. So simply go to fxpressor.com. I'll share the link with you guys. So I just shared the link for registration. So from fxpressor website, this is where you register for an account. So you simply head straight to a real account. If you want to start with a demo or what you call a practice account, then you can click on these. And once you click on that, go ahead with the necessary steps. Register for an account. It's free. It's completely online. And then once you are through with the registration, the next step is to log in into the same website. So for me personally, I can't create a live account. Just notice how simple it is. I just type in your title, your first name, middle name, which is optional, your last name, email address, phone number. Then you enter your city, go to the next step, and in 3 steps, you'll be registered with the fxpressor successfully. So now that we are through with the registration process, the next step is to log into the website. Notice that once you click login, you get this pop-up window. There's my fxpressor on one side and fxpressor trader on the other side. So if you want to trade on the fxpressor tab, then you go straight here. But for this particular purpose, you are looking to log into the members area or to the dashboard. So once you click on that, you will be logged in after you type in your email address. Then you type in your password, and then you continue. It will take you to the members area where you are able to do several things on the platform. So I'll type my password here. So now I'm logged in. So these are several sections that we have already covered in other sectors of our education program. So for today, I'm just looking at the basics or the simple introductions. So here you'll see your account summaries. So every time you deposit money, you'll see your total balance, total credit if you qualify for a credit, total equity, which is the amount of money you can withdraw from your account. You'll see your total deposits, your total withdrawals, and all that jargon. You'll see your live accounts here. So every time you create a new live account, you'll see the details for the live account here. So the account will have an account number. The type of account will be shown here. The leverage in that account, which you can adjust by just going to the menu here. Then you adjust the leverage, which is something we'll cover later in the presentation. There's equity, balance, margin, credit, and all that jargon. So for your trading balances, you will go to view here, and at the same time, you can make deposits and withdrawals from this particular section. So you can also create wallets where you can, let's say, deposit money in your wallet and then decide where that amount goes in terms of your live account. So for instance, you can deposit, let's say, $1,000 in your wallet and then decide to trade 500. So you move $500 from your wallet to your, let's say, live trading account, and then you have 500, but the other 500 remains on the wallet. So it's very easy to use a dashboard that works easier for everyone. So now we move to the platform side. So from the platform side, this is where you download the trading application that you use for your trading. So we have 3 types of trading platform. We have one very simple app called fxpressor Trader. Makes trading activity very simple. So if you are looking for an experience such as using the Trading View platform, then the closest platform you'll get here is the fxpressor Trader. However, the most commonly used trading platform is the MetaTrader 5 and the MetaTrader 4. MetaTrader 5 is an advancement of the previous MetaTrader 4. So if you learn how to use the MT5, then you'll also be able to use the MT4. So for the purpose of today's presentation, I'll be focusing on one, and this is the MetaTrader 5 trading platform. So you can download directly from here. If you are using a mobile device, then you download the trading platform from this other section. So you can get it on Google, that is on Google Play. So if you're on an Apple device, then you use the App Store link here and then download and install that application. So right after you download and install that application, you just click download. It will take you to the download page. And once you have your platform installed, then it should move us to the next step of today's presentation. So the trading platform simply looks like this. So once you get here, it's very simple. You need to log into the trading platform. So you go to the top file menu that is on the top left-hand side, click on file, and then go to login to trade account. So from here, this is where you type in your account number, then you type in your password here, and then you select the right server for your trading account. So once you're through with this step, click OK, and you will be successfully logged in to your trading account. And that's some of the basics. I believe you only have to do this once. So you register once, get your account verified once, create a live account probably once, and then go to the platform, file, log into the trading account. Then from here, you also do it once, make sure that you save your password so that every time you log into the trading platform, it doesn't have to request you for a new password. So once you do this and you're logged in, you'll see your account number here, your name. You will see your account balance here on the toolbox trade section. Then on this other far corner, you'll see the data traffic on the trading platform. So you will see the amount of data going in and out of the trading platform. So if you're not connected to the internet, the trading platform will not work. So make sure that you have a stable internet connection for you to enjoy a smooth trading experience. So the MetaTrader 5 trading platform is very simple. It has some very basic sections that you use in your trading activity. And I'll be describing those sections in a very easy manner. Once you understand them, then it will be easy for you to execute your very fast trade. So let's start with the market watch section. So in some instances, you might have the data window here, and also in some other instances, you might have the navigator section here. So in order to optimize your trading activity, if you're a very new trader, you may not need the data window. So you can always close it using the small X button at the top right corner. And also for the navigator, you don't need it as much since we have seen how to log in and only do it once. So just remain with the market watch section here. You can always right click on the market watch and then select show all to see all the assets available for trading in your account. So this is more or less like a Forex board. So if you go to, let's say, a bank or a Forex bureau, you'll see a Forex board there presented in a digital format where you're able to see the exchange rate between one currency and the other. So if in Kenya, it will be the Kenya shilling buying and selling against the dollar, and you see both the prices, the bid and the asking price, you'll see the spread, and also the daily change. So this information is available here. So I'll try and show you. So on the market watch section, and make sure that you understand, this is the market watch section here. It will have the asset name abbreviated in for what we call a symbol. So in this case, you can see AURUSD representing the exchange rate between the euro and the US dollar. There is a bid price, there is an asking price, and then there's a spread. So the spread is basically the difference between the bid and the asking price. Then there's the daily change. So you'll see the daily change in form of a percentage. And in this case is 0.11% for Euro USD, indicating that the euro has been gaining against the US dollar today since the opening of the market. So if you can't see any of these columns, you can always right click, go to columns, and then add that column manually. So this is the column for the spread, and this is the column for the daily change. So now that we've mentioned that, now you can scroll through the list. You can move from Euro USD to Pound USD, USD CHF. CHF is the short or the symbol for the Swiss franc or the official currency of Switzerland. We have the AUD against the US dollar. This is Australian dollar. We have the euro against GBP, Great British Pound, and some of these currencies are no-brainers. You just have to know them no matter what happens. So as you scroll further, you'll notice there's more and more currency pairs available for trading. The list is long. So we also have what we call stock market indices. So an example here, you'll see the Chinese 50 index futures. So this is futures contracts. We have natural gas futures. We have high-grade copper futures. We have metals here. This is platinum against the US dollar. This is gold traded against the US dollar. This is gold against the euro. This is silver against the US dollar and silver against the euro. So all these are available for trading. So you scroll further. Here we have the Australia 200 index. We have the S&P 500 index futures and so on. So we also have the VIX, or what we call the CBOE volatility index. Basically measures the volatility of the S&P 500. And as you scroll further, you find more and more assets. Here we have 3M, a very popular company in the UK. As you scroll further down, you meet more and more companies such as Boeing. We have Caterpillar, we have Cisco, Chipotle, and so on. So all these assets are available from one single platform or one single interface. So all you have to do is to identify the asset you want to trade, open that chart for that asset, and then do your analysis before you make a trading decision. So the goal of today's session is to make it very easy for you as a beginner to understand how to operate on this trading platform. And once you understand that, then we are going to dive deeper into more contents. So by the time we get to episode number 10, you will have all the information that you need to get yourself started with trading. So that's it with the market watch section. And then we have this other section that is referred to as the charts window. So this is where you are able to visualize your charts. So for instance, if I zoom here, notice there's 3 buttons. So one is for closing the chart, I can close that. The other one is for minimizing. If I minimize, it gets smaller. And the center button is for maximizing. So once you maximize, then you have your full screen chart. So let's try by opening a new chart. And this is quite easy. Let's say you want to trade the euro against the US dollar. And this is perhaps the most traded currency pair in the world. It has the highest participation and also the best pricing. So you start by right-clicking on this asset and then go to the chart window. So click on chart window here, and the chart will load on this section here. You will notice the name of the chart and also the name of the chart on the lower side here. So we right-click on any empty background. So identify any black space here, right-click, and then go to the bottom tab labeled properties. So we are going to try and change the properties of this chart so that we have a clean, well-communicating chart. So there's 3 tabs here, common, show, and colors. So under common, just make sure you have your candlestick selected. Remember, there is 3 charting types. We have the bar charts, the candlesticks, and the line chart. So just a moment here. So just make sure that you use candlesticks. They are the most visual and most commonly used charting system. So then we move to the show section. Notice that our pop-up window only has 1 price. So we need to see both our prices, that is the bid and the asking price. So select the show asking price so that you can see both of your prices. Now you can see there's a red line and a gray line representing the bid and the asking price. Add some period separators and remove the grid. This will make your charts cleaner, and also you'll be able to identify specific periods like the price action of a day, a week, and so on. You can remove the tick volumes. There's no need of these. There's no way of tracking the amount of volume traded in Forex because it's a decentralized market. Then you might want to remove the trade history, but maintain your trade levels. And now we move on to colors. So colors are very simple to change. Don't make a mistake of changing the background from black to white. That would be a mistake because the prices are displayed in white. So if your background is white and price is white, you will not be able to see the prices. So instead, change your scheme from a black to white. And now we have a very nice chart here. Whereas for the bars going up, it's a very common tactic to use the green color, while for the bars going down, use the red color. So for the bull candle, that's the candle going up, we use the green color here. On the other hand, for the bear candle, we use the red color, and now we have some very nice and clean chart. So for the bid and asking price, I'm just going to click here. For the bid price, I'm going to use the green color, whereas the asking price, I'm going to use the red color. And now I have a very nice chart. I click OK, and the settings are applied to my chart. So if I zoom out here, I'm able to view the candlesticks and how they've been performing. And these can help me to easily identify what has been happening to this market. So you can tell, let's say from 4th of July, this was America's Independence Day. Price went down, that is for the euro against the dollar, meaning the dollar was strengthening, kept going down all the way down to around, this was this was the 14th of July. Then the euro started strengthening, went up for like 3 days before starting to move sideways. So from your charts, you're able to understand what is happening to price. So the chart is very simple. On the lower side, you're able to visualize the movement of time, while the vertical axis represents the movement of price. So the chart is a basic representation of the movement of price over time. So as we go on with the series, we'll do a unique webinar focusing on the candlesticks that you see, the green and red bars, what they mean, the different types of candlesticks, the different types of candlestick patterns, how you interpret that information and use it in your trading. So I hope we are making some good progress here. So just a moment. So after we are through with the introduction to trading, the second session will be focusing on charting skills. So we'll be looking to understand what charts are and how you use them in trading. The third one, we'll be looking at tradable assets. So we will look at all the asset classes, ranging from futures, the forex pairs, the commodities, the shares, the indices, and so on. So the fourth one will be knowing your candlesticks, understanding your candlesticks. Fifth one is market structures, knowing your chart patterns. Sixth one, trading strategies. 7, risk management, how you manage your risk. 8, understanding market news or the fundamentals in the market. 9, building a trading system. And then 10 will be finally how to trade like a pro. So a very interesting journey that we'll be following here. So I'm hoping that you're making some good progress here. So if you have any questions that are arising from the presentation, feel free to type them in the comment section, and I'll be responding to those questions right away. So let's go on. So now we have seen what the market watch is and the information you get on the market watch. We have seen the charts window and the information you get on the chart window. The next part will be a very key part of today's presentation, and this is understanding the bid as well as the asking price. So it's very, very important that for you as a trader, you understand the bid and the asking prices, so that you can use them easily in your trading. So, for instance, when you're trading Euro USD, this is the raw chart, or what you call the ticker chart, basically showing you the raw prices as they move in the market. This being the asking price, which is the red line here, and the blue line being the bid price, and it's the same information right here on the chart. So, when it comes to prices in these markets, there's really nobody that sits down and determines that this is going to be the bid price and this is going to be the asking price. So prices are set through what we call discovery or price discovery. And this is as a result of the forces of demand and supply in the market. So at any given time, if you look at an asset such as Euro USD, we know that there is buyers, so many buyers at any given time, and also there's so many sellers at any given time. So these participants in the market will set different trades. So you will have, let's say, a buyer saying that I'm looking to buy this number of euros at this specific price. So if this is the price bar here, let's say a buyer is saying that I would like to buy this number of euros at this price. Let's say 1.02224. So the same case applies to the selling side. So it's a very open market. So a seller will say that I'm looking to sell this number of euros at this specific price. So when you think about it that way, you realize that there are so many participants. Imagine the number of traders that are currently trading the euro against the US dollar. Remember, about 20 countries are using the euro. And also for the US dollar is the world reserve currency. So these are so many trades happening each and every day. And as long as the market is open, which is 24 hours a day and 5 days a week, from very early on Monday morning through to very late on Friday evening, the market is always open. So a lot of participants placing orders every now and then. So I want us to think about the bid and the asking price this way. I'm going to narrow down this to a very simple example. So let's say you go to a supermarket, or not even a supermarket. Let's say you go to Nairobi and you want to buy a laptop of a very specific model. So if you go through the shops that are selling the specific model of your laptop, you'll notice that different shops will have different sizes of orders available. And also they will have different prices. So you might go to shop number 1 and this shop is selling their laptops at 100K per laptop. Another shop will be selling at 85K, another one at 105, another one at 110. Now you get the idea. So as you go to more and more shops, you realize that they have different sizes and also the different amounts of supply. So one shop may have, let's say 50 laptops available for sale. Another one may have 1, another one may have 10, and so on. So eventually, at the end of the day, after you've gone through all the shops, when you decide to make a purchase, you logically buy from the seller that is offering you the lowest price. That is assuming all the laptops are the same, so it doesn't matter who you buy from, since the laptops are the same, so what matters is the price. So you're going to buy the laptop from the seller that gives you the lowest price, and that is what we define as the asking price. So if you're looking at the Euro USD market and you look at the asking price, then that is the seller that is offering the lowest price in the market as at that moment. So it's a spot price. So it is as at that spot moment. So as time goes, you notice that the price keep on changing as the market activity continues pushing prices up and down. So on the other hand, when you are looking to sell a laptop in town, if you go through the various vendors or various shops that buy laptops in towns, you'll notice that these buyers will have different offers. So one buyer may bid your laptop at 100K, another one may bid at, let's say, 85, another one at 50, 45, 70, 65, and so on. So you get the idea. There's so many buyers that want to buy your laptop, but also they have their own set prices. So if you go through all the shops available and at the end of the day, you make a decision to sell your laptop, then to gain maximum value, you sell that laptop to the highest bidder. So the guy that offers you the highest price is the one that you choose to trade with. So in trading, you're only interested with these two guys. You are interested with the buyer that offers you the highest price and the seller that is offering you the lowest price. So if you want to buy the euro, you buy from the lowest seller. If you want to sell the euro, you sell to the highest bidder. So the trading platform will give you these two prices in real time. So every time there's a new change, you'll see that in the actual price, and you can always choose when and how to interact with that price. So if it's Euro USD, notice that this is the current price. You can choose a smaller time frame to visualize your price. For instance, I can choose 5 minutes here. So with a 5 minutes time frame, it means that each and every candlestick represents the price action summary for the last 5 minutes. So this being the current candlestick here, the current time is 8:33. So this means the candlestick started forming at 8 and will close at 8:05. So the candlestick is formed after every 5 minutes. So this is the last 5 minutes, the previous candlestick, the previous 5 minutes, and so on. So these are units of 5 minutes going back into the past and what has been happening in the Euro USD exchange rate after every 5 minutes. So the summary is very simple. Basically shows you the open, high, low, and closing price for that period. So in the last 5 minutes, we have a green candlestick, meaning that price went up. So if it's a red candlestick, then it basically means that for that period, price went down. So if you want to participate and trade, that is speculate whether the price will go up or down, you have the option of going for a buy trade or even for a sell trade. So if you expect the exchange rate to move from this point here, and then after, let's say, a couple of minutes or even hours, you expect this price to move in this direction, then it's a good idea to go for a buy trade at this level, and when price goes up, you sell at a higher price. So on the other hand, you're able to benefit when prices are going down. So if price is going down, it means that you can enter a trade here by selling fast. And then when price goes down, you buy at a lower price. So I know it can be a little bit difficult for a beginner trader to comprehend selling fast, something that you don't have, and then buying it back later. So I'll try to explain what it means and how it works. So let's say EGM Securities operates down the street, and the only way you interact with EGM Securities is via phone. So if you realize that the exchange rate of euros is going down, you can call your broker and tell fxpressor to, let's say, sell this number of euros at this price. So the broker will execute the trade immediately in the market, and they will sell, let's say, 10 euros in the market. So once they sell 10 euros, they will get this amount in dollars. So this will be 1.02201 times 10, which would be like $10.22 stored somewhere. Then the price goes all the way down and you need to cash out your trade. So you make another phone call again and you tell the broker to buy back the 10 euros. So if the broker had borrowed 10 euros to sell in the market, then they buy back the 10 euros at a lower price, then they're able to repay those 10 euros back to where they have gotten the 10 euros. However, if you look at the transaction, they cashed in, let's say, $10.22 by selling fast. And now, when you buy at a lower price, you spend a little bit less money, let's say 10.20. And now, in this case, you have made a profit of yourself, a profit for yourself by selling fast and then buying at a lower price. So literally it operates in the same way you would do a buy trade. So if you buy at a lower price and price goes up, you sell at a high price, that difference is your profit. So if a stock is trading at $5 today, you buy it today, tomorrow you sell it at $7, your profit is $2. So if it's going down and you short at $5, price goes down to $3 and you buy back at $3, the difference is $2 and that's your profit. So that's basically how the market operates. So I've done a couple of trades in preparation for today's presentation, and I'll be showing you or illustrating how I did the trades. So let's start with the first trade here. And this is the stock of an American company called Palantir. So the stock is currently trading at around 9.70 and also 9.61 being the two prices. So Palantir is a company that deals with artificial intelligence. Has three products. I think we have what we call Gotham Foundry and their base software. So they mainly lend this software to the US government departments for use in their operations, and then they are getting paid in these huge contracts that earn them money. So a lot of investors have been very bullish on this project. This is not a recommendation to trade this asset, so you'd have to do your own research. So this is only for educational purposes. So some time back, I believe about a week ago, in fact, there's a date for here for this trade. So you can see the details here. The symbol for the asset is Palantir. This is the company I'm trading. The symbol is usually PLTR. So the ticket number is a unique identifier to the order, more or less like a serial number. Time is a timestamp. Whenever you execute a trade, there will be a timestamp for that. And then the type of trade will be indicated here. You can have a buy trade, a sell trade, or a pending order. Then the volume is the number of contracts traded. So the number of contracts traded here is 1. So when you trade one contract in stocks, you're basically trading one share. So for those who are new to trading, I know that we have had traditional barriers to entry where, let's say in the Nairobi Securities Exchange, you'd be required, let's say, to trade a minimum of 100 shares and so on. So for offshore shares, there's no such limit. You can literally buy one share. And if the broker enables what we call fractional shares, you're able to even buy a fraction of a share. So those traditional limits are no longer existing. So now, if you want to buy one share, you can literally type in one volume of 1 and then buy. So I bought this asset some time back. This was on the 15th of July this month, today being the 25th. So on 15th, it's around here, I bought one share of Palantir at a price of $8.90. So you can see the price at which I bought right here. Then I set a stop loss on this trade. So a stop loss is an interesting risk management tool that you use to manage your risk for every trade. So here I set my stop loss down here. You can see the red dotted line marking my exit price. So it's an instruction telling the broker that if the price of this asset drops all the way back down to this point, then sell that share at that price and then take that loss away from my balance. So if the price of this asset went down and got to this level, the broker will be forced to sell the share at the current market price, and I would make a loss of $0.73. So if the price kept on going down, then I would not enjoy any further losses. That's why it's called a stop loss. However, if the price keeps on going up, then I keep on making profit as the price goes up higher and higher. So if the current price doubles, let's say it goes from 8.9 to let's say 18 point something dollars, I will have doubled my profit. And if it keeps on going and higher and higher and higher, then I can hold on to that stock longer and longer and longer. So the current market price is at this moment. So potentially, if I were to close the trade right now, I would sell to the highest bidder. The highest bidder is the green line here, and the potential profit I would make from the trade would be $0.71. So notice that if the price keeps on going higher and higher, then I'll be making more and more money. But if it keeps going down lower and lower, then I'll be losing more money. But I've set a limit to the maximum amount of money I can lose on that share. So if you decide to trade, you don't have to trade one share. Let's say in my example here is just one share to make it simple for you to understand. So if my stop loss here is, let's say, $0.73, let's say you wanted to take a bigger risk. You can even buy 10 shares. And in this case, you'd be risking $7.3. So if you, let's say, decide to buy 100 shares, it would cost you $890. And the risk you'd be taking if you set your stop loss here would be about $73. So the stop loss is a very nice and unique feature that helps you manage your risk for every trade. So the other trade I have here is US oil. So I'll be illustrating these two. Let's see. So here is a trade that I executed earlier in the day, going for a buy trade. So it's US oil. The ticket number is here. The timestamp is here. You can see it's the 25th of July. The type of trade is buy, and the volume or the number of contracts traded is 0.3. So I'll explain what this means. The price at which I bought was $95.45 per barrel of oil, and I set a stop loss at 92.190, meaning that if this trade goes all the way down and gets to this point, then I'll make a loss, and that loss can always be calculated. So you can always predetermine the maximum loss or the maximum risk that you want to take in a trade. So in this case, from this point here, you'll notice that it's a risk of $978. So if the price drops and gets to this point, the trade will close with a loss of $978, which will be subtracted from my account balance immediately. But then, if I'm right, the market keeps going up and gets all the way to my take profit order, which is the opposite of a stop loss order, then the broker will be forced to close the trade with a profit of $2,033. And this balance will be added to my balance as my profit, which I can withdraw immediately or continue building my account. So now notice the price has moved above my entry point. So the gray dotted line marks my entry point. This is the price at which I bought US oil. So as long as the market price remains above my entry, it means I'm at a profit. So in this case, I'm up by $105.50. So you're not limited by your stop loss or your take profit. So at any given time, you can always adjust your take profit, you can adjust your stop loss at any given time. And if you want to close your trade, then you just move to this section here, click the small X button, and the trade closes immediately, and the money is added to your balance. You can visualize the records under history here. So you can see that I took a trade here in US oil, made a profit of $102.90, which was a percentage gain of 0.36% in my account. So you always visualize your trades there. So I have crossed one trade, so I'm left with one trade, which is the share in Palantir. So now it makes it very simple for you to understand how to execute a trade. So, how to monitor your trade. So the last part of the presentation before we end will be, in this case, executing a sample trade. So as you can see with the Euro USD, it seems to be going down for the better part of the afternoon. So this is what happened since the opening of the day. So the Euro USD opened here at midnight, went down and then up, and then down, and then up, and then down, up, and this is the current price. So let's assume that the price has significantly gone up and is now headed lower. So I'll do a sample trade. You go to the new order section here, and then you determine the number of contracts that you want to trade. So let's say you want to trade a full contract. This is not advisable for a beginner trader. So if you are trading for the first time, use the minimum, which is 0.01. This will be very helpful in your risk management. So in fact, let's use the 0.01 level at first. So in this case, if you're speculating that the price will go down, then you click sell by market, and immediately the order is executed here using the bid price. So you have sold to the highest buyer. So you can click, hold, and drag to the upper side to set your stop loss limit. So let's say we just want to risk $5 in this trade. So we observe on this end here, and then keep dragging. And once we get $5, then we drop. So click, hold, drag, and drop. So this is our stop loss here for the trade, or an instruction telling the broker that if the price rises to this point, then close the trade and subtract $5 from my account. No further losses. But then, if I'm right, and the price keeps going down, I can set my take profit on the lower side. So let's say I'm targeting to make double that, which is in this case $10. So I click, hold, and drag, get to $10, and now it's an instruction telling the broker that if the price keeps going down and gets all the way down to this point, then I'm making a profit of $10. So the broker will be forced to close the trade once the price gets to this point, and the amount reflected here, $10.3, will be added to my balance as my profit. And regardless of whether my machine is open, whether I'm there or not, whether I'm sleeping or not, that trade will be executed. And at the same time, if at any given time I want to close my trade, I can always log into my account, see the amount of profit or loss that I made here, and just make a decision to close. And the amount reflected here will be added or subtracted from my balance, whether it's a profit or a loss. So it makes it a very easy endeavor to execute your trades. So at the same time, you don't have to trade immediately. Sometimes you can use a pending order. So there's various types that we are going to cover in further sessions. So sometimes you may go to new order, and then instead of making a market execution, that is entering the market directly, you can use a pending order. So let's say you want to buy the US oil if the price goes a little bit lower. So you can use a buy limit order and then set the price that you want to buy at. So let's say you want to buy when price drops to 91.8. So you type your 91.8 as the price here and then place your order. So make sure to select the right volume. So let's say you want to trade a full contract. and then you execute that order. So you are telling the broker that if the current price of this asset drops all the way down to this point, then buy me one full contract. And that's basically how you execute your trade. And as your trade runs, then it will only get active when the price gets to this point. So as at this moment, the trade is only pending because it's a conditional order, telling the broker to buy only when the price gets to this level. So I'm hoping that is easy for everyone to understand. And now we can look at the Q&A section. So if you have any questions, I'll be answering one or two questions before we end the presentation for today. So a good one, we have a question from Nicholas. Show me how to read a chart and understand how it works. So a good question. So let me answer this real quick. So we have a chart here for US oil. So there's a lot that goes into analyzing a chart and determining whether there's a good chance the market will move higher than the current price level, or whether the price will move lower than the current level. So there's a lot of research and analysis that goes into this. However, when it comes to reading a chart, let's first of all remove the market watch and this other section. And now we have a very clean chart. I'm going to remove these lines to which are very instrumental in doing your analysis. So when you look at these, first of all, know your time frame. So this is the H1 chart, meaning that each and every candlestick represents the price action summary for 1 hour. So since the beginning of the day, this is where we have the vertical dotted line or the period separator. Price has moved all the way down and then up, down, and this is the current price. So if you check the number of hours, it's exactly 19 bars, 19 hours. So this is the price action for yesterday. Yesterday, there was no market open. Remember, today is Monday. So this was Friday last week. Price opened here, went up, down, closed here. So this was Thursday last week, Wednesday, Tuesday, Monday, and then the other Friday and so on. So when you're trying to understand what's happening in a chart, you first of all understand what the candlesticks imply. So let's do an example with today. So price opened here, the beginning of the day, closed here, where the green body of the candlestick ends. So in the second hour, price opened here, closed lower. The third hour, price closed higher. Fourth hour, price closed lower. Fifth higher. Sixth, slightly lower. Seventh lower. Eighth higher. Ninth, slightly lower. 10th lower. 11th hour of the day, price closed higher. 12th hour higher. 13 higher. 14 lower. 15 higher. 16 lower. 17 higher. 18 higher. 19 lower, and now this is the current hour 20. So prices are seemingly looking to close higher. So when you understand what the candlesticks represent, and that's a price action summary, the summary will have 4 prices, OHLC, the open, high, low, and close. So for instance, if I highlight this green candlestick here, it can tell you a lot of what was happening. Price opened here, where the body starts here. So the long tail indicates the extreme price. This is the lowest price reached within that 1 hour. The long tail to the upper side represents the extreme price to the upper side. So this was the highest price reached within the hour, and the closing price is where the body ends here. So that's basically how you read the chart. And now, when you look at movement, we'll be doing another session, and this session will be focusing on market structures, knowing your candlesticks. So as long as you keep on following the session, you're going to understand these market structures and how you read them. So for instance, I can do, let's say, some analysis here, try and understand the extreme prices, and this will give me an idea of the average directional movement in that price. So for instance, from the 19th of July, price opened here, went to a high of this point, a low, and then a high and closed here. So since then, notice the price moved down the following day and a high of this point and then a low of this point. So using point number 1 and this point number 2, I can estimate point number 3. Then from this high, the market kept forming lower highs as well as lower lows, indicating that the average directional movement in this price for the set number of days was taking this format. So for, let's say, 4 straight days, today being the 5th, this particular market was on a bearish momentum. So sometimes analyzing the market is just trying to understand the trend, the strength of the buyers versus sellers, and then using that information to make your trading decisions. So sometimes you just, let's say, draw your trend lines to understand the average direction in a market so that you can determine whether to follow the trend or go against the trend. The trend is the general direction of price. So sometimes the market will have a general direction, which is upwards, or what you call bullish momentum. Sometimes it will be downwards, which we call a bearish momentum. Sometimes it's sideways, sometimes it's consolidating. So you will encounter a lot of this happening in your trading. So we'll be covering more on these as we progress with the episodes. So I'm hoping that that answers your question. Another good question, the daily report, why is it so misleading? I can't comment about that because I don't understand and I don't use the daily report personally. So I would have to go through the information, check, and then maybe respond on the next episode. So the purpose of this particular series is to help you understand the market, understand the trading platform, understand the analysis techniques, build your own trading platform. And once you, sorry, not platform, but system. And once you build your own trading system based on your strategy that you feel works for you, then eventually you trade like a pro, having a plan and understanding what you are trading. So I'm trying to make it as simple as possible for anyone to participate in these markets and make a dollar for themselves. So another good one, fxpressor sends signals on our emails, but the signals or predictions are nowhere near reality or why. This is a good one. So if you follow this series, I can assure you, you will not need any signal from anyone. So you will be able to understand the market. You will understand how to do market analysis by yourself. You will understand what it means when you talk about, let's say, key price levels, when you talk about price action, extreme price levels, overbought, oversold levels, divergence trading, and all that. So this is only the first episode, and it's only getting you introduced to trading. So just be patient, follow through the episodes, and eventually, once we get to the end of this, hopefully you're going to get or become a profitable trader. So, and there's also another comment, and this is good from Caroline. I've been losing seriously. This is not good, but also on the other hand, it's a good indication that you need this series. So I'll be doing these on each and every Monday. So as long as you follow, you're going to build right from introduction, get to know how to analyze the markets. We look at the sentimentals, the fundamentals, the technicals, and once you understand all that, then the next part is from the markets. So thank you for your feedback, Priscilla. I hope to see you guys next Monday.